Thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the broadening trade and why some say it's only getting started, especially with some fresh AI trade jitters today. We'll discuss and debate with the investment committee. Joining me for the hour today, Steve Weiss, Jim Lebenthal, Brenda Vingello, and Kevin Simpson. We will check the markets. We did have an extension of the record high for the Dow off the open today, but as you can see now, it's a wholly different picture. There's the intraday look, and we just showed you the other major averages, which have all gone decidedly red, especially the NASDAQ. Let's show that, because that's where the pain really is. That headline that Oracle is delaying some of its data centers for OpenAI to 2028 from 2027. The delays are said to be, Weiss, largely due to labor and materials, but a delay is a delay. And frankly, anything that calls into question the pace of the build-out or the return on the investment is going to make this market skittish. And there it is, front and center in your face today of what that looks like.
Yeah, and I agree with that. And particularly when multiples are at levels that are assuming that you're going to get a quicker return. Look, the reality is, we just sold an electrical contract that works primarily in data centers for 4 times what we paid for it just 2 years ago. Now, there's some M&A that drove that, and that's because of the scarcity for skilled labor. So that is factual. It is also factual that this delays the return on the investment. So you're absolutely right. So companies like Oracle should be down. Companies like what we're seeing, across the board, the energy companies, so GE, Vernova, et cetera. However, if people sold Meta because of their CapEx, this should be attractive to them, because they're delaying the spending, and by that time, you'll be able to see if there will be a return on the investment. So I would use it as a buying opportunity. I did use it for trade, and it's going to be a quick trade, buying the Qs here. Just
on this sell-off?
On this sell-off, because I think it's wildly overdone. Really speaks to the nervousness in the market, the nervousness about AI, which we saw in Broadcom, which I thought was a really good quarter, and I don't own it. So it's more emotional than factual at this point.
I mean, there's just so many questions. If you're delaying something, Brenda, until 2028, is the demand still going to be there in 2028? Are we going to have overbuilt already by 2028? You're just unable to answer any of these questions. Not you, but us, right? You just don't know. But there's enough skittishness in this market about the AI trade in general that an announcement like this or even a report like this is going to show up pretty dramatically in the market.
Absolutely, and I think you're exactly right. Nobody knows the answer to those questions. And we talk to a lot of managers who who are private credit managers, for example, that are leery of doing any lending as it relates to data centers, because there's just a big question about what the long-term outlook is for those facilities and whether all of the capacity we think we're going to need now is really going to be needed in the future. So I think having a moment like this and taking a little bit of the wind out of the sails of some of the AI trade is a healthy development, because I think we don't want to get ahead of ourselves, but there's no doubt that this is a huge wave of technological innovation that's going to change a lot of things. But when we think about all of the CapEx and the infrastructure layer, I don't think we want to do a repeat of the telecom build-out that happened in the late 90s that then took years to absorb that capacity.
You just don't know whether you're going to repeat that or not until you do. That's the problem with a sea change like this, and when you do a build-out like this, you just don't know what's what until perhaps it is too late. I'll come back to the table in a minute, but I want to bring in Seema Modi. He's been following this Oracle story from the get-go. It is a equity story, it is a debt story, and it is this new development, but also what you flagged earlier today, this filing in the 10Q yesterday. Can you just put the whole puzzle together for us today?
Let's start with that headline. The market's certainly sniffing this OpenAI Oracle data center delay story as a financing issue, because remember, the street has been laser focused on Oracle's $300 billion deal, Scott, with OpenAI. So any signs of delays, the market is going to be sensitive to. And yes, it does follow a new 10Q that was filed by Oracle that shows a significant increase in data center leases, which, as a credit investor told me, does raise the likelihood of Oracle going to the debt market sooner than expected. The street was sort of anticipating early to mid 2026. Now the expectation is this needs to happen in early 2026. And then the question is, will it be a jumbo bond sale or a term loan involving banks, which does increase the likelihood of those banks using Oracle's credit default swaps as a hedge? That's one of the reasons we've been seeing CDS surging in recent weeks, Scott.
Yeah, I mean, this week, look at that. I mean, 20% near for the CDS week to date. Seema, thank you very much. Kev, you sold Oracle over the past week. Are you out because of the issues like we're seeing in the markets now, like a report like we get today brings to mind just what's happening here?
Yeah, I wish I could take credit for that, but more candidly, it had a lot to do with just the poor price action. So as the stock has been breaking down over the past 3 weeks, we use a relative exit strategy. So we sold a third at $280, and obviously wish we would have sold it all there. Sold another tranche at $240, and then just within the past week, we sold the last tranche at $200. Not really expecting any more bad news because so much had already been piled on the shoulders of Oracle, which is why when you have something that you need perfection, any like little problem there is going to be amplified, and that's what we're seeing today.
Jim, you still have it.
I'm still hanging on to it. It has now become the more speculative position in my portfolio. And it's a reason why we don't just own one stock, why you blend it with other stocks that are more stable. But I do think that if the OpenAI money comes through, which, Scott, as you were pointing out, we're not going to know, frankly, for years. But if that money comes through, this is a stock that's going to be meaningfully higher from where it is now. And I'm willing to take the risk that OpenAI money doesn't come through, basically at the end of the day, because this is Larry Ellison's company with decades of a track record of being successful. He has, frankly, to be quite honest, risked the company many times before. There's nothing that guarantees he'll be successful again, but he does have a long track record of success.
You got to retort to that, or you take the other side of that, or what do we want to do with that?
Well, I'm not going to do anything with Oracle because Oracle's a different company now than it was. And Oracle is always going to have until they pay down the debt and until, more importantly, OpenAI is able to generate enough revenue to fulfill their part of the bargain.
Jim's take is clearly in Sam and Larry, we trust.
Yeah, well,
right? Altman and Ellison.
Yeah, and I'm not willing to do that. Larry Ellison's got a long track record of performing, and Oracle's a great company. But this is just, again, a different world and what they've mortgaged. And they have mortgaged part of the company.
Man, look at that chart. That is something over the last 3 months.
Yeah.
The CDS blowing out and the equity getting blown out.
Yeah, and I don't mind debt in a company that can afford, that can carry the interest payments, and they can do that in spades. I don't mind that. I think that's actually good financial management. However, you got to look at what the end market is found. The end market is OpenAI, which hasn't been able to generate, and it's difficult for you to forecast that they will generate enough revenue to live up their part of the bargain. And as we've seen over the last couple of weeks, with Google coming in and taking 2 steps ahead of OpenAI, I just don't think you want to put all your eggs in one basket. And while that's an exaggeration of what they're doing, there's so many other ways to make money in the market playing the AI trade than trying to pick a falling knife in a sector where investors typically don't do that.
Yeah. So for me, it's not a falling knife because I've been in this for 3 years, so I've had a triple in it already. And what I'm willing to say here is that if this goes right, which is a question, there are real risks here. I used the word speculative a minute ago. I'm going to use it again. This is now a speculative stock. But if it comes through, and by it, I mean Larry Ellison, I do mean Sam Altman, I mean OpenAI, this is a stock that 180 right now will be over $300, kind of in the blink of an eye. And by the time the market figures that out, it's already going to be much higher.
But what do you have to see, or what does the market have to see to get this stock to move up that percentage?
It's going to take some time. And by time, I mean another quarter or two, because as Seema was just talking about, it's in the next quarter or two that this funding needs to come through. And that's an overhang right now. We know that. That is part of why.
So you really think a next quarter or two? That seems completely unreasonable.
Well, no, because what's really vexing me right now are the credit default swaps. And as Seema just pointed out, that may well be the banks hedging in advance of financing that's going to come in. in over the next quarter or two. But if you get that financing done and the pressure comes off of the credit default swaps, I think people are going to look at a decline in the credit default swaps if it occurs.
It's a
and they're going to say that's a time to get in the stock.
They're a proxy, not just for Oracle, but they're a proxy in a way to hedge the AI trade.
Exactly.
So there's an inflated number there that's not just to back Steve up on this. This isn't just an Oracle story. It's the only place you can go where you're going to see this debt, where you can go and be hedged across the trade.
No, of course. This whole thing is a proxy for the AI, everything almost. It's like AI hopes, AI dreams, AI jitters, AI doesn't work out. I mean, this stock and CDS are sort of reflecting everything.
And I don't think this works, by the way, until you start to see real revenue
from OpenAI.
OpenAI. It's not going to be a quarter or two. It's the market is assuming that they're going to get the lending. They're going to get the funding.
It's worth pointing out that while OpenAI is a huge part, more than 50% of the remaining performance obligation at Oracle, it's not all of the RPO. It's about 55%. There's a lot from the other AI players that, frankly, if just that comes through, this is a cheap stock right now.
How about this? So if you look at where the pain is being felt today, of course you look at the power players. Take a look at some of these names. Let's cycle through as many as we can show. GE Vernova is coming off a monster day in a huge week for that stock. Let's show the week, right? Because they had their investor day and they blew everybody away. And the stock was great. And then obviously, look at that. That's the week. Now it's down 4% today. Constellation, Eaton, NextEra, Quanta, Vertiv. Brenda, you've got Eaton and Quanta too. These are the places that you look if you're worried about this trade and the durability of it, whether some of these stocks have simply just been bid up too far on where the expectations are expected to be. Thus, the valuations have expanded as well.
I think there's still room for grid investments and a need for more electrification. It's not just a data center play, but I hear you. A lot of these stocks have really had a tremendous year, and that's reflected in the valuation. But I do think the fundamental story there is still good. So on a day like today, we would be more a buyer or adding to positions rather than selling, because I don't think over the next few years that this trend is going to change. We can look out to 2028, and that's still a ways away. And I think the fundamental story is still going to be positive, especially for these companies that are, really directly tied to grid investments or electrification, which is an onshoring story and other things that are playing into that strength. It's not just data centers.
And to the point,
when you have Vernova and
I do.
Vertiv too.
I do. Vertiv is a bigger position.
Yeah.
And that's exactly your point that you were making. So if you're building fewer data centers, you're putting fewer cooling racks in them. However, the assumption is that the data center announcements have been so fast and furious that it's already reflected in Vertiv stock, and I don't believe it is if you look at the stocks.
Well, you might not be building fewer. These stocks are trading as if you're building in perpetuity.
Yeah.
And we're not going to know the answer to that question. I don't know, 28? 27. The fact that we're even having a conversation, a headline about, some of Oracle's data centers being pushed to 28. We're at the end of 25.
I don't care about timing differences, frankly. I take a much long-term view. And I bought some. I added to Vertiv for a trading position at between 160.50 and 161 this morning when the news broke down. The stock was already down. It's down about 10 or 12 bucks earlier. So when it traded down 18, I just said, this is just an overreaction. It's a knee-jerk emotional reaction. You can scalp some quick dollars on a trade. And I think that's true of all of them, by the way.
Well, Broadcom, let's look at that one because it's dropping on questions about its sales forecast, its backlog, and future margins. The stock's down near 11%. We talked to you, Brent, on the way in. Let's talk to you on the way out. What do you think?
I think this is all about guidance. Q1 guidance was really for 100% growth in the AI chips, but then they didn't raise overall guidance for the year. And so I think investors took that to mean that there was maybe some sign that things weren't going to grow as fast for the remainder of the year. But I don't think that's the case. I think the fundamental story here continues to be strong. I think this is an expensive stock. It had an amazing run year to date. And so again, some of the wind being taken out of the sails. I think it's a healthy trend with this AI trade because again, there was so much concern about a bubble and I think we're all getting ahead of ourselves a little bit, to your point, Scott, and talking about what's going to happen in 2028. But I do think the evolution of companies now taking on debt to finance a lot of this CapEx is a newer development that I think is causing some concern. But I do think with the company, I do think this trend is going to continue, and so I think there's still strength out there. I do think that Broadcom is still very well positioned. So I would view, again, a move like today as being more of an opportunity to add to existing positions or get in if you have missed it entirely.
There's no nervousness on the street after these results, it doesn't appear. Stacey Rascon goes to 475. Bank of America goes to 500. Barclays and KeyBank do the exact same. There are target hikes all across the street today, judging that earnings report as being really good, not the representation that you're witnessing here from a chart standpoint, Kev.
Well, there's other things taking place also with this tape that we've got to keep in mind in December from a seasonality standpoint, window dressing, people do things for tax purposes. I thought the report was fantastic. I didn't listen to the whole conference call. I know it was after the conference call that we really saw the stock sell off. But I agree with Brenda. If you don't own this name, you can take a position here, absolutely.
I mean, you're taking some positions, and I mean, the chips in general are weak today, obviously. You bought Micron. The target goes to 300 at Stiefel. Stock's down a bunch today, down 5%. You bought Applied Materials, too. Give me something on that.
Yeah, we bought Micron earlier in the week at 243, so we're still up 2 hours. But today's pullback gives you a chance to get in and follow us into this trade. I think that there's a lot of opportunity here. I haven't owned this stock since the 90s. I mean, literally, that's how long it's been since we've owned Micron. So we're excited about the memory story. This is in advance of earnings, so they've got earnings next week, which I think will be really positive. Applied Materials, we have owned this off and on in the past. It's a starter position for us, but a chip play, best of breed, and one of the names that hasn't been the top tier. So its performance has lagged a little bit. So we're seeing if we can sneak in here and catch a few points.
You know, what a time to show you this next picture. I'm not sure if you all have seen it or not, but Time Magazine's Person of the Year. It's many persons, the architects of AI. Let's show you the cover, because it's so interesting on a number of different levels, as you've got Zuckerberg and Lisa Su and Elon and Jensen and Sam and some others too. Is there a double entendre here? I thought that as I looked at this, yes, these are the architects of AI sitting way up on this on this piece of steel. I couldn't help but think, look out below also.
Yeah.
You know, that one slip up from maybe not any one of these, but most, becomes a problem if there's one crack, so to speak, in any of the foundation of this building that is being built. You got a problem.
Yeah, I mean, is that why it looks like they're suspended over? They are suspended over everything.
Well,
and
that's
a steep drop down
picture from, gosh, I don't know when the original one was from, the 30s maybe.
Yeah.
But it is interesting to look at it from both perspectives. This is who we are relying on for a great part of what's happening in this stock market.
Yeah,
no slip-ups allowed.
Yeah, I mean, look, it's extremely bright people. The only one I know personally is Fei Li, who I serve on a board with of a company that's fully automated the warehouse with robotics. And I can tell you that you talk to them, the future is so bright, and in terms of AI, and it's only what most people know from what they read, but beyond what they read, whether you talk to them or you talk to a Joe Lonsdale, it's just going to revolutionize everything. It's going to make healthcare. I'd recommend people read Joe's Substack piece last week on AI that was written by Sebastian, who runs healthcare for him at 8VC, and it opens up your eyes to what it can do. For example, make healthcare more accessible, cheaper, et cetera. So I'm all in on AI, and I recognize there can be significant volatility, significant drawdowns.
Yeah.
But that's how it always is.
We're all
technology.
kind of all in and reliant on the people you saw in that photo. By the way, the FT's Person of the Year is Jensen Huang. I don't think that would surprise many. Now, besides what's happened this week with Oracle, there's that, and Broadcom, the story of the week really has been what's happened in the Russell, what's happened with the Dow, what's happened with the equal weight S&P, and how tech has continued to lag. Wolf Research today says, is the broadening finally happening? I think we're all kind of wondering that. If you look at the sector winners after the Fed decision, it's just like cyclicals all over the place. Materials up 4%, financials up 3%, industrials up 2%, healthcare's done well. I thought Michael Hartnett, Bank of America today, had a really interesting note where he talks about the K-shaped economy being all the rage in 2025. Now it's the market sort of sniffing out the run it hot economy in 26, and that's why you're getting the rotation. Main Street over Wall Street. You've got mid caps, Bren. You got a lot of this. You're in mid caps. It's the small caps. It's the micro caps. Things that are going to work if the administration wants to run this economy hot, especially into the midterms.
Yeah, and I think if you look at that mid-cap exposure, for example, it's a lot more financials, a lot of regional banks in there, a lot of REITs, a lot of areas that actually have not performed very well this year, and mid-cap in general has been a laggard relative to other areas. But I do think as rates are coming down at the margin and a strong domestic economy should really provide a nice tailwind to those areas. And they have been laggards not only in price, but also in earnings growth. So if we start to see earnings actually start to come through in those parts of the market, I do think we could see some nice outperformance there as things broaden out.
This trade speaks right to you, right? Yeah. The run it hot trade.
It does. I mean, so many things that are non-tech in my portfolio speak to this, whether it's financials, industrials, transportations. But Brenda just said it. For this to work in a sustainable way, earnings growth from what I'm going to call the other 493 stocks has to pick up. Now, right now, it's projected that by the second quarter of next year, earnings growth in the other 493 will be equal to the earnings growth from Mag 7 and increasing beyond that from there. That sounds great. Here's the problem, and I think we all know it, is that we've been saying that's going to happen for the last year and a half. So we've been pushing this out. It has to come through for this trade to sustain itself.
How about your Citi today? Let's take a look at shares of Citi. Raised to overweight from neutral. JP Morgan target goes to 124 from 107. Think about that one.
Well, it's become very interesting. This was a stock, Scott, as you well know, I was talking about as being cheap for what seemed like forever. It's no longer cheap. We're now at least at a slight premium to tangible book value. Tangible book value is roughly $100 a share. I would say at 120, 125, we've got to start to think about trimming this a little bit. Now, for everybody who's listening, I want to point out that I had this when it was literally 50% of tangible book value. So it has grown to a very large size in my portfolio.
52-week high again today. This has been a great stock.
And it may well, and frankly should have more room to grow beyond 120, 125% of tangible book value. But portfolio management, risk management says at some point you have to trim this. So another $10 from here, I might consider trimming it.
Well, you trimmed Goldman Sachs. That stock hit a record high yesterday. Why did you do that?
Yeah, I mean, I'll take the baton right from Jim. I mean, that's portfolio management. This is a stock that we've owned for over a decade, probably 15 years. We've never sold the core position, but we keep a maximum target of about 5% to a ticker. So this grew to be a 7% weighting, all-time highs. We trim it back to 5. We're freeing up 2% cash dry powder. It gave money for us to purchase other things that we talked about earlier, and it's always nice to have a little cash on the sidelines to put to work. So Goldman Sachs, best of breed, love the stock, we'll own it long term, but to Jim's point, excellent sound portfolio management.
Yeah, I'm not tempted to trim any. I'm not restricted by those position sizes. I run bigger position sizes and will on occasion use margin. I'm just going to let it run. There's nothing, and I think you would too if you weren't.
No debate.
Yeah, the fundamentals haven't changed, and that's what drives me to cut back. Sometimes if it's a ridiculous move higher on what I think is unwarranted or just emotional higher, then I'll trim. But right now, not.
Take a look at shares of Visa also. These have been talked about a bunch this week. Added to the tactical outperform list. Let's show the week, too, because I think it's had a pretty interesting week. Added to the tactical outperform list at Evercore, the target goes to 380 from 375, right? There was a positive mention about this name, if not an upgrade, a day or so ago. Brenda, you have this, right?
I do, and this is high-quality company, but tied to consumption, obviously. And if we have an ongoing strength of the economy, and if we really do have a broadening out of consumer spending trends next year, that should certainly benefit Visa. But also, if you look at just globally, the payments, electronic payments, still have a lot of room to go. And if you look at Visa in particular. They've really been benefiting from a lot of the value-added services, which last quarter contributed about half of the revenue growth that they saw. So really seeing a few levers there for them to pull to continue to grow earnings and be relevant. I know there's been some questions about that within the payments services area, but I think Visa is going to continue to be a strong player there.
All right. We'll take a quick break. Kevin's got a move that we still have to get to from the top sector of this quarter, so we'll do that along with some of our calls of the day next. Let's talk about several committee names hitting new highs quarter to date. Okay, Caterpillar, it's a record high today. Steve Weiss up 31% quarter to date.
Yeah,
Talk about a lot of stocks.
Yeah.
We have talked about this one, but probably not as much as we should have.
Yeah, I agree with that. Considering the performance, and Kevin owns it as well, and it's for both of us, it's up close to 80% X today. Look, they're the picks and shovels, and to me, I love playing the picks and shovels rather than picking, at least in the private markets, the next AI technology that's going to come out. And they'll continue to do well, particularly as rates come down. You'll get the build again, but it's not just data centers for them. So I love the stock. Not selling it yet, but if it gets up to about 650, I may trim.
Delta's up 24% in the quarter. It also hit a record high today. Jim?
Yeah, all-time high, and it makes sense to me. I just want you to consider that the estimates for next year started this year at around $8.30. After Liberation Day, they went below $7. They're now just above $7 now, which means they haven't even come close to regaining what was lost in terms of next year's estimates after the Liberation Day. And I will tell you that we all think, or at least I think, the economy is going to be much stronger in 2026 than we thought at the beginning of this year. There is still much room to catch up in Delta Airlines.
Yeah, Unity Software is up 23% quarter to date, a 52-week high today, Kev.
Yeah, we caught this at the right time, but I still think it's a high-risk trade. There's a big turnaround play here that has to be seen to believe, so to speak. But we're on the right track. The 3D gaming, the industrial simulation, there's a lot here to like, but just be careful. Stock's done really, really well, and I think it's a little more risky to jump in at this time.
Brenda, Parker Hannifin, up 18.5% quarter to date, also hitting a record high today.
Yeah, this one's really been a sleeper for the year, up about 40% for the year. But this is a great way to play aerospace trend. That's really what's been driving strength in their business. Also, they've been focusing on cost control, so that's been helpful too. But I think this is a trend that's likely to continue. So it's been a great performer this year, but I think the outlook still looks
Let's
really
hit
positive.
Hasbro. It's up 10.5% in the quarter. That's a 52-week high, Kev, yesterday.
I think a lot of people thought that tariffs were going to hurt this company more than they did.
I was thinking that as I was looking to see which stock I wanted to do next, and it's the first thing I thought of.
Well, they did a lot of cost cutting in advance of that worked out. They helped their margins. They've got fantastic brands. And let's face it, we're heading into the holiday season.
All right. Got a big one, 3 o'clock today. The Professor Jeremy Siegel. He'll be with me. Alex Kantrowitz. We're going to talk a lot about this AI trade. Avery Sheffield, Warren Pies, Aswat Damodaran, and all valuations. And Malcolm Etheridge. I hope you'll join me at 3 o'clock Eastern time as we close out this week. Brenda, final trade.
Palo Alto Networks. It's been a laggard this year. Still think there's a lot of room for growth for wallet share within that security ecosystem to go to that company.
Kevin Simpson.
Micron Technology ahead of earnings. If you like valuations, take a look at that forward PE.
All right, the farmer.
Adobe, I do think the momentum has turned positive.
Weiss.
Vertiv, I think you should buy it here. It's going to bounce.
Yeah, big day for that one. Wow, down almost 8. All right, I'll see you on the bell. And let's welcome in now the Wharton professor, Jeremy Siegel. He's also chief economist for Wisdom Tree. It's good to have you back, of course. I'm wondering what you make of what's been happening in the market. You see it from Oracle, you see it from Broadcom, and frankly, you see it from a lot of other stocks. This AI trade, at least for the moment, seems a little out of favor.
Yeah, and when you sell for 30 times earnings or 40 times earnings, nothing can go wrong. And when a few of the narratives wobble, as they are, that puts that caution into them. By the way, I think those stocks are still up pretty healthily for the year, but for the first time in a while, we've often talked about the rotation, and then it disappears a few weeks later. This rotation I think might have more legs than some of the ones that we've seen earlier this year.
Boy, it's interesting that you say that. Others are as well. Wolf Research today, is the broadening finally happening? they would wonder that maybe it is. If you look at the sector winners that have taken to the forefront since the Fed decision, materials are up 4% and financials are up 3%, a record high today. Industrials up 2%, a record high today. Healthcare's done quite well. This certainly seems to be at least a trend change of some sort.
Well, you can't say for sure because there's been so many head fakes in the past. But as I said, this one has more legs in the sense that there are more things that are happening that throw doubt on how fast or how profitable all the AI build out is going to be. And you know what's going on, Oracle, these delays, part of it is because expenses are going so high for building some of these data centers. And that, of course, adds to the burden of how do you get profitability out of them. On the other side, some people say, hey, you know, if they're delayed, maybe that will prevent an overbuilding of them. So you can see a little bit of a maybe little silver lining there, but I think it adds more questions than answers in terms of the ultimate profitability of AI.
Yeah, what is your big takeaway from this Oracle story today, which has undoubtedly unnerved the market at least a little bit?
Well, I think it started, you know, when, the big, all the capital expenditures that run into the hundreds of billions or trillions. Academics have been doing research on how well do firms ultimately do that have high amounts of capital expenditures. And Scott, the results are not good. I had a chapter in my book called Capital Pigs, in the sense that those that expend more relative to their income on capital overexpand and ultimately suffer poor returns and lower profits. Now, I'm not saying that that's necessarily going to happen to AI, or certainly all of the AI, but that narrative has to come in mind. And there is research on saying too much capital expenditures is going to be bad for your stock.
What do you make of the idea that Michael Hartnett of Bank of America puts forth today, that really what we're witnessing in the market may in fact be a relative trend change, that what was a K-shaped economy being, in his words, all the rage in 2025, now we're front-running what he suggests could be a run-it-hot economy in 26, and we are thus rotating into a lot of areas that would take advantage of that kind of trade. Are you a believer in that?
Well, I was actually quite encouraged by, the Fed response. Jay Powell, he seemed more calm about inflation than I've seen in a long time, in terms of saying, yeah, most of the effective tariffs should be washed out. It's a one-time increase. He said indicators of inflationary expectation are more under control. Yes, it was a close decision, but I was actually quite impressed by that. Now, there's two bumps that we have. We have the bump of the Supreme Court tariff announcement, and what is that going to be, and what is that going to make? And then, of course, as we know, we have another fiscal cliff at the end of January. And I think the betting markets actually say 30% that there's going to be another shutdown. No one wants that. That could have subtracted 2 percentage points from GDP in the fourth quarter, and it could even be worse if it happens. I think everyone wants to avoid it. But after that, if we can get past those two, there's the headwinds of the tax refunds, the tax bill, the effect of the tariffs of basically having gone through the system and digested better than people had thought. That actually marks a better 2026 than certainly I thought we might have, let's say, at the middle of this year.
So you think the Fed was decidedly less hawkish than you had thought they might be going in?
Yeah, absolutely. I did say there was going to be a hawkish cut, but it was a very mildly hawkish cut in the sense of the narrative that Jay Powell presented to us was the most positive narrative on inflation that I had heard. By saying it's mostly the goods that are tariffed. We're seeing favorable signs on the service front. My indicators of inflationary expectations have not increased. A number of things that I thought was very favorable. Yeah, we did have two dissents, but interestingly enough, and I don't know if you heard Goolsbee this morning being interviewed on CNBC.
I did.
He said, yeah, I dissented, but I'm actually lower for next year on the Fed funds rate than the median estimate.
A dovish dissent,
now he's not
right?
a voting member, but he's a very influential member because he's such a strong economist from Chicago. So even though he won't be voting, his opinion really matters, and I found that to be quite interesting in his discussion.
I did as well. I thought it was, as if you could ever have a dovish dissent from a cut, that's pretty much what you got. I'll tell you, stay with me 1 second, if you would. You know, one of the areas that's done quite well away from tech is financials, the banks. Leslie Picker joins us now with that big move that we've seen this week. And you really did this week, Les, have a front row seat to the conversation in this group.
Yeah, as you mentioned, Scott, it was really quite a solid week for the banks, investors digesting just a slew of news coming out of the Goldman Sachs Financial Services Conference earlier in the week, where we were, as you mentioned, had a front row seat. Plus, there was some news on the macro and the regulatory fronts that's broadly seen as conducive to the industry. Goldman Sachs, the best performer of the Big Six this week, thanks to continued optimism about the capital markets environment. The firm's CFO told CNBC on Tuesday that 2026 could be a record year for M&A. Even JP Morgan is poised to close the week in the green, despite some guidance on expenses that caused that stock to slump on Tuesday. The Fed, of course, cutting rates, and then the 2s and 10s yield curve spread is now the widest in almost 4 years. And of course, a steepening yield curve can be a tailwind for loan-making profitability. The regulatory front also broadly favorable for the sector this week as well, notably with yesterday's news that the Trump administration plans to overhaul the financial stability watchdog to remove, quote, undue burdens on the system. Scott.
All right, Les, perfect. Thank you very much. That's Leslie Picker. Now let's bring in CNBC contributors, Capital Area's Malcolm Etheridge and 314 Research's co-founder Warren Pies. The professor, of course, is still with us. Warren, you first. You have somewhat of a run-it-hot target for 2026 in the market, 7850. We're getting another 1,000 points out of this S&P from you.
Yeah, thank you for having me. I think it's hard to construct a bearish case on the doorstep of 2026. You know, you have, as you discussed with the professor, most everybody, even the dissenters, are expecting cuts next year. We have, I think we're going to get 12 to 13% earnings growth. That'll be the best earnings year we've seen since 2021. And part of that is we're going to see margins expand. And I think that's key to our outlook and how it distinguishes itself from most of the strategists out on the street. We think, contrary to the consensus, that multiples will actually expand next year. And so that's how we get to our target. We're also in what I would call a recovery backdrop. We already had an 18+% decline 8 months ago. You go back in history, there's only one case where you get another one of those types of really serious corrections over the next 18 months, and that was COVID. So it takes some kind of really serious exogenous event. So I put all that together. I just don't know how you can be very bearish at this stage.
Wow. That makes sense to you, Malcolm?
Yeah, I don't disagree. I think it's very telling that the professor started off the conversation talking about valuations, and companies that are 30, 40 times earnings might have a tough road to hoe next year, which does say something about the broadening that you guys are discussing. I think the AI trade continues to roll, and I think that maybe we start to place our bets with companies that have a little bit more going on than just spending to build out their AI infrastructure. So if you think about an Alphabet, for example, and Amazon or Microsoft, they've got well-diversified revenue mixes that don't just rely on leasing out cloud servers and those types of things, and can appease shareholders along the way while they build out. I think that's more likely the tech trade that carries the narrative next year, but I also think that there's definitely room for a lot of other sectors to participate in a way they haven't in quite a while. Professor, 1,000 more S&P points for next year. Does that make sense to you?
Well, that would be a 15%. I'm trying to do the math over here.
15. Yeah, it is.
That would be on the high, not impossible. Listen, the Fed, raised its estimate for GDP growth next year by the biggest amount that I've ever seen outside of coming out of a recession, which we're not in. I mean, by 50 basis points, it shows how much they have raised their forecast for growth, and it's certainly its growth and its earnings and its margins that drive stock prices. All three are in a positive thrust right now.
You know, Warren, I'm just curious if you think we are on the cusp of a legit trend change in this market. Run it hot, go cyclical. There's going to be AI concerns for the foreseeable future, right? Any little blip is going to cause consternation somewhere. So if you're going to run it hot, especially into the midterms, let's run with what we've got here.
Yeah, I think that everyone's wanted to see this broadening for years, really. And my view is more like Malcolm, which is that there is going to be broader participation. Look, this has been three of the narrowest years going back over the last 75 years. This is three of the five narrowest years on record, meaning we've had the fewest number of stocks beating the index. And so I think you will get a broader, and we've only had three sectors, including the two tech sectors, outperform the index. So you get a broader move next year. And I think we're set up more for this continuation of a Goldilocks period, say the first quarter, maybe the first half of the year. But I do think the run it hot, commodities, cyclicals, trade starts to take over in the second half of the year. And that's commodity positive, bond negative, and more choppy for the second half of the market.
It's interesting you talk commodity positive. Jeffrey Gundlach telling us, Wednesday after Fed Chair Powell was done, that he's pretty bullish on the commodity space. What about that, Professor? I mean, the dollar
I
has
heard
been
Jeffrey
certainly weaker,
on
right?
that. He thought the dollar was really going to go down, and I think he thinks there's just going to be too much excessive cutting next year, and I just don't think that's the case. I mean, go down another 50 basis points. I mean, get that curve 100 basis points steep on the term structure. That's a healthy market. That's not a necessarily inflationary market. I think, oil is 57, the most important commodity. Gasoline prices just, I think, hit a 3-year low on average yesterday. Copper's a hot area. There are a few hot areas. But I really don't see a general commodity inflation in 2026.
Interesting. Malcolm, I'm going to let you finish it out with, reminding people that you sold out of Oracle yesterday. Maybe you're feeling good about yourself today. The timing seems right for a stock that's down in total almost 13% this week. What do you make of the news that crossed today, even with the denial from Oracle?
Well, in all seriousness, I don't love it just because it's not great for the entire ecosystem, right? I am very bullish on the AI trade, and I'm not a short seller, so I don't have a vested interest in any one company doing poorly against the other. But I do think that the timing of this is not great. The air is being let out of this balloon, so to speak, at a time where you started off the conversation with Alex pointing out that there wasn't a lot of room for error with all of these different tech titans who are helping to steer the AI narrative. And I think it's very telling if you rewind back to the information's reporting on Microsoft's reasoning for why they decided not to tie their entire fates to OpenAI when they obviously had the chance as the first mover there. I think that's very telling as to what the underneath the surface looks like with relation to the spending commitments here with OpenAI. And so for Oracle, I think it's probably not the right time for anyone looking to be saying, this is where I want to buy the dip, or I want to step in here and start to initiate a position. I think you're more than likely to get a much better buying opportunity in this name over the coming days.
All right, we'll leave it there. Good weekend, everybody. Malcolm, thank you. Professor, of course. Warren, to you as well.
I think the still looks like very normal kind of pullback, but we really have been chopping sideways for a while here at the S&P 500 level. Today's low, we first got to that level October 24th.
Hey, Keith, we had a guest on earlier today who said you could do 15% in the S&P next year. I mean, if you do have a decided trend change, it might be hard to do that. Don't you think, if these big tech stocks take somewhat of a back seat?
Yeah, I mean, I think it could be a situation, not our base case, though, is that you see this rotation and you see a lot of stocks doing well, but the headline index not doing as well. But, Scott, I ultimately still think in a week, in a couple of days where tech has been under pressure, I do think at some point next year money comes back to tech and that secular story. But we have to remember, I mean, off the lows, the tech sector was up 70%. That was double the S&P. There is some uncertainty. So you're rebuilding that wall of worry. I just think there's not a real clear near-term catalyst for them. But at some point next year, whether that's 3 months, 6 months into the year, I think money ultimately comes back into tech. And I mean, we're not big into price targets, but I will say when we look at the weight of the evidence in our work, it does suggest the potential of high single-digit, low double-digit returns for next year. But you need tech to at least participate in order to see that.
Yeah, Keith, I appreciate you joining once again. 15%, we'll see. It'd be hard to do that if you have a slip up in tech.
It wouldn't be wild. It would obviously be a great 4-year run if you got 15% next year. You can't rule it out. It's more common to get a 15% year than it is to get like an 8% year, counterintuitively. So we'll see. Economic data next week, though, going to be interesting. Might change some minds on the Fed.
All right, good stuff. Mike, thank you. Again, our thanks to Keith. Bell rings. We got 100 years of the Harlem Globetrotters, and they are here, ringing this bell into the weekend. I'll see you on the other side, into overtime with more Game Time.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. This is the segment of the video where we will cover a number of stocks that they talked about on the halftime report and closing bell. We just saw Jeremy Siegel. We saw some other guests. And we're going to break it all down. But first, before we take a look at those stocks, one of the things I want to talk about is, what happened today? The Dow Jones down 0.51%, NASDAQ down 1.69%, S&P 500 down 1.07%. You can see here that it dropped in the morning, right? Tried to recover, pulled back some, but actually made, if you look at it, I mean, from the 12 p.m. low, it still kind of closed up higher from 12 p.m. So that's a positive. The Russell 2000 here basically stabilized, so it kind of found a support level there. And the Dow and the NASDAQ did something similar. So the Russell was also down 1.53%. It's Friday, December 12th, and it's 9:29 p.m. I'm doing a late night video here for you guys. Tech and AI stocks tumble as Broadcom warning sparks bubble fears, dragging NASDAQ to worst week in months. We're going to break it down now. And here's what we're going to cover. I'll just show you very quickly, and then I'll do a quick synopsis of the heat map. So we're going to take a look at the Dow, the Euro stocks, the Russell, the Qs, the SPY. We'll look at the technicals using the Ichimoku indicator, and I'll explain how that works in a second. About 16 stocks and ETFs that were discussed on the shows. All right, so we're going to review those. What I've done is actually previewed these stocks, reviewed them ahead of time, put some blue flags on the strongest ones. All right, and I'll explain why those are really strong and why we may want to consider those over the other stocks. Here we'll take a look at some of the Mag 7 stocks like Tesla, Apple, Meta, Microsoft, Amazon. We'll look at some of the strongest sectors in ETF form here. And we also have about nine member requests here. So we'll look at those stocks as well. So before we do that, let's take a quick look at the heat map. I just want to do a quick review to see which stocks within the S&P 500 performed well and which ones didn't, and which sectors are looking good. Technology sector got hit pretty hard here. You can see that. The semiconductors also, computer hardware, Cisco, for example, was down. NVIDIA down 3.27. Look at Broadcom down 11.43%. Oracle down 4.47%. Amazon was down. Google and Meta were down slightly there, about 1% or so. Tesla was down, 2.7%. The financials did pretty well, except for like Goldman Sachs and Robinhood. You can see here the specialty industrials didn't do so well. Consumer defensives did pretty well today, and so did utilities. Now let's take a look at the 1 week performance though of the S&P 500 stocks here. It changes the colors around a little bit more, so you can kind of get a better idea of how the stocks looked for the week. So there may in fact be a rotation taking place. The fact that we got hit this much in 1 week in the technology stocks here. And you can see financials doing pretty well. Healthcare still holding up quite well. Industrials, consumer defensives more in the green. Basic materials is doing pretty well. Energy is kind of mixed. Utilities still kind of in the red there for the week performance. And let's look at the 1 month performance. It is, I like to take a closer look and see how how these stocks are doing the entire month so far. So for the last 30 days or so, utilities have been the laggard here. You can see NVIDIA, Microsoft, Amazon down, but pretty much Walmart was up 12.82, Google up 7.88, Meta up 5.78. Let's take a look at the groups now. So this shows us what sectors did well today. And you can see consumer defensives were up 0.78%. That's the first time in a while. And healthcare was up, consumer cyclical up slightly. Technology down the most, 2.9% drop. If we look at the 1 week performance, technology down 2.19. Basic materials up the most. Financials, industrials looking pretty strong. 1 month performance, basic materials up 5%, followed by communication services and consumer defensives. Utilities, technology, and real estate not looking particularly great for the month. 3 month performance, and this is where it changes, and you can see technology is only up. Think about that. The technology sector is only up 2.27% for the entire 3 months, if you look at the entire group, okay? If I clicked on that, for example, we're talking about 776 total stocks that are within this particular segment that we're looking at. Okay, let's get back to, let's do this. Let's go into, we want to take a look at these indices here. And like I said, we're using Ichimoku, folks. Now, the Dow Jones actually was up quite nicely today. Take a look at this. It was, even though it was down 0.51%, it held up above that 484.39 level, that prior high. So the Dow Jones maintains its blue flag. It's still above the Tenkan-sen, Kijun-sen, and above the future cloud here that's bullish. Very quickly, for those of you who are unfamiliar with this indicator, let me just show you what this all means, these lines, so that you're not confused. I was confused the first time I looked at it. It looked very complicated the very, very first time at a glance. But ironically, Ichimoku, which is the Japanese for at a glance, okay, it does, once you understand the rules here, it makes it so much simpler. Okay, so here's the price, all right, 485.40. That's the closing price right there. Now, if you look back here, that's also the closing price in a line form. It's projected 26 periods into the past. The idea here, why is this superimposed, this closing price, today's closing price, for example? Why is that superimposed into the past? So we can see where it is in relation to the candle 26 days ago. All right, and if the white line is above, it's very bullish. If it's below, it's bearish. And if we go back in time a little bit, you can see back here, for example, during this time, like around January, all the way through, this point here until April, the Chiku span, they call that the Chiku span, was under price, and that was not the right time to be adding positions. So that's rule number one. We want that white line above the candle. Rule number two, we want what's called the Tenkan-sen. That's the green line that you see right there. That's the 9 period. It's the midpoint. So it takes the high, the low of each of the last 9 periods, divides it by 2, and finds that midpoint of each candle. Okay? And it plots it right under today's closing price. All right? Under that candle. So that's the midpoint of the highs and lows divided by 2 of the last 9 periods. The red line is called Tenkan-sen. This one's called Kijun-sen. It does the same thing, only it's 26 periods instead, so it's a little slower. So 9 and 26. And then we've got the midpoint of these two moving averages. All right, so you've got the Tenkan-sen, Kijun-sen. If you project the midpoint 26 periods into the future, that's where the Senko span A is. That's the light colored part of the cloud itself. All right, so Senko span A is the light colored blue line right there. Senko span B is the purple line, and that is the midpoint of the last 52 periods. So it goes, all right, instead of plotting it under the candle, it just plots it 26 periods into the future, creating this future cloud. So it helps us to sort of get a sense, of the bullishness. So if you see a thick cloud, you're in a much stronger uptrend. If it starts to, for example, flatten out like you see over here, that might mean, hey, there's some consolidation taking place here. And if it starts to expand like you see right there, that's actually quite bullish, all right? So that's what we want to see. And we always want to see that Senko span A above the Senko span B. If we go back in time, for example, when we had this, pullback, we would have got the message right here where we saw that twist take place, and you would have seen the 26 periods in the past, and it could have kept you out of this big decline, all right? So the idea is to help us, to guide us, so that we can determine how strong the trend is, and are we holding above specific mathematical numbers, right? And so this is the daily chart, And I like to use both the weekly and the daily chart. So the daily looks really good on this one. It's very strong. How does the weekly look? Also very strong. So the Dow is up very strongly above the moving averages in the cloud. Therefore, if it passes both of the time frames, both the weekly and the daily, it gets a blue flag in my book. FEZ, the Eurostoxx 50. Here's a weekly chart, very bullish. Daily chart, also very bullish. Did it pull back today? Yes, it was down 0.79%, but did it hold up above the 9 period? Because we do want price to be above all these moving averages, including the cloud. And the answer is yes. Okay. So, but we did have a bearish pullback today. You know, it happens. It's just part of the trading experience, right? We're gonna see that sometimes. And the future cloud is also still bullish here. Russell 2000, also bearish today because it dropped under the low of that previous candle, creating what's called a bearish engulfing pattern. These two candles, and that's a bearish pattern. It's when the larger this red candle basically engulfs the smaller green candle. And you can see the closing price, for example, right there, is actually lower, much lower than the closing price yesterday. I'm sorry, yeah, yesterday. I didn't do a video yesterday, but yeah, this was Thursday's candle, and here's Friday's. Still overall, future cloud looking good. Everything looks good. The directional movement index below is the ADX, is the momentum that's moving up. That's positive. We can see the green line pulled back a little bit, and the red line moved up, which is what, you can see that right there with the bearishness today down 1.53% but I still like this one. I like Russell. And here's the weekly chart, creating a spinning top, which is also a reversal candle. So, might we see a further pullback? It's possible. But the good news is we do have support levels here too, 250, 277, based on that prior high right there. And it's stopped right in its tracks. Here's FEZ, also doing the same thing with the trend line right there, holding up above, literally above that 64.36, very, very close. You can see that little wick sticking underneath there. The Qs, on the other hand, today, not so great. And what I'm concerned about here with the QQQ ETF is we've got a lower high now. So you can see that lower high from this. We never took out that 637.01 level, and that's concerning. So the Dow looking good, the Eurostoxx looking good, the Russell still looking strong technically, but the Qs much weaker, and the SPY, okay, not as weak as the Qs because it did create. It's basically kind of building a base. All right, that's what I call that right there. It's when price gets stuck within a box in a rectangle. So this one here, yes, it pulled back and it did close under today on the daily chart under the Tenkan-sen. But if you look at the weekly chart, still holding up quite nicely. We still have all the bullish characteristics that we're looking for, or traits, for the Ichimoku indicator. The VIX actually did move up a little bit, but it actually popped above the 9 period there, the Tenkan-sen. It reached a 1797 level or so, somewhere around there, and then it dropped right back under. So that's actually a good sign, honestly, in my opinion. It's at a very low level. That's the volatility. We want this to be in these numbers. We want it to be very low, ideally under the cloud as well, as we see right there. So it's the inverse type of chart that we want with the VIX. Now we're going to take a look at the stocks talked about here. And there's about 16 of them we're going to run through. Here's Caterpillar. Okay, another bearish engulfing. If you're unfamiliar with these types of patterns that I'm talking about, bearish engulfing and so on and so forth, let me just show you guys a quick little chart, a cheat sheet that you can use. Okay, so the first thing you want to do is go to x.com, my Twitter page, and you can find me under @BlueCloudTrader. Okay, do a little search, find me. Scroll down under highlights. By the way, I also throw some posts throughout the day sometimes, so you can check out some of these other posts that are in here. But if you click on the highlights tab right there, and you scroll down a little bit, you'll find that candle pattern reference sheet, and this is useful. There's also another stock patterns cheat sheet below here. We can see the rectangle patterns, the continuation patterns, cup and handle, what that looks like. Okay, inverse cup and handle, the head and shoulders pattern, You can find all those. But this is important to learn about the Japanese candlesticks because they give us a lot of information on the chart. All right, and you can understand the candles through here. And here's like some of those, like the bearish engulfing that I was just talking about. There's one of them. It's a double candle pattern. There's the bearish spinning top. All right, we're going to see a couple of patterns that I noticed earlier, like the dark cloud cover. This one here. Okay, it's when you have a bullish candle and then you have this hovering negative candle, almost like a dark cloud above it. Okay, so that's a good one to memorize. You've got the bearish harami. And then on the other side, you've got all the bullish patterns, okay? And this is what they look like. All right, so let's get back into the charts. So Caterpillar's got a bearish engulfing pattern, but look where it stalled, right at the 9 period. Everything still looks very bullish on the daily chart as far as I'm concerned. In the weekly chart, yeah, we've got a shooting star. So this thing could pull back maybe another 5.2% before it finds, or 5.6% before it finds support. So just keep that in mind. DAL, Delta Airlines, on the weekly chart, stuck inside this little range based on these prior highs here of 69.98. It was unable, it pierced it today, or this week, I'm sorry. This week it pierced it because we are looking at a weekly chart, but it was unsuccessful in closing above it this week. Let's look at the daily chart. There's a daily. So here's Friday's candle, a bearish. This is the one I'm talking about that I talked about just a second ago. All right, let me just show you again. It's the dark cloud cover. Okay, so look at those two patterns right there. Let me just click on it to make it bigger. Whoops. Dark cloud cover right there. And there it is. Okay, so you can see it just hovering. All right. So Delta Airlines, it's more than likely to pull back a little bit and take just have a little quick little pullback here. I would not be shocked to see that. GEV, on the other hand, I think is higher probability of actually bouncing on Monday. And the reason I say that is based on this pattern that you see right here. So you can see this downward channel here. Price broke above it concisively on Wednesday, December 10th. Now pulled back, and where did it stop? Right on that trend line that I had drawn based on that high. You know, this is a trend line that I had created back on October 26th of 2025. Wow, that's interesting. So that's basically where we are, okay? And so like the fact that it came down and stopped dead in its tracks, that's important. And there's also more support. You get the Tankinson, the 9 period. So there's a higher probability it's going to bounce here. That's GEV, that's the daily. Here's the weekly, looking pretty. So you can see that very clearly that it's breaking through on high volume. And this is where the other indicators like the directional movement index come into play. I've got these set at a 9 setting. So positive DI9, negative DI9. If you see the green line here moving up and the red line moving down, and the ADX, which is the white line, moving up, that means that momentum is increasing. And you can see that here in the price. You can also see it in the volume. This is how much participation is taking place. 27 million shares traded today. I'm sorry, this week, versus last week, it was around 12 million. And the week before that, it was around 9 million. Okay, so you can see the steady increase of buying taking place here, breaking through. Okay, so utilities, maybe that will start to bounce here soon. Or at least this stock is looking good. Goldman Sachs is also looking pretty good. Here's the weekly chart. There's that volume increasing week after week. Here's the daily chart. Again, down 2.53%, creating a bearish engulfing. So to see a pullback makes sense. Here's why I say it makes sense. Look at how many days the price has been moving up. Multiple days. It's not normal. Let's just say that. For price to just keep on going straight up. So to have a pullback, it's not necessarily a negative thing. It gives the stock a break, and it gives people an opportunity to get back in at a hopefully better price, you know. What about PH? Ticker symbol PH is Parker Hannifin Corporation, industrial sector. It's in the diversified industrials industry. You can see a bearish engulfing pattern, but it's stalling right at Tankinson. Weekly chart, a spinning top, but very strong. This is why these stocks have blue flags. RSP. This is the Invesco S&P 500 equal weight. That's also looking good. Breaking through that breaking through this rectangle. And it's happening, again, on steady increasing volume. That's what you want to see. If you take a look over here, the ADX is moving up. So RSP I like, okay? Guys, by the way, tomorrow, just so you know, every Saturday, I put out a members-only video, which is usually around an hour long, and I go over my entire portfolio, all the stocks that I traded throughout the week. I also give about 20 to 25 new stock ideas for the upcoming week. So I do a very thorough analysis of the sectors as well, a much deeper analysis of the sectors, the industries, which industries within the sectors should we be focusing on. That's important too. And I can tell you, yeah, like today I took I closed out of a number of positions, some nice profitable ones based on that I had from last week's watch list that I created and shared with members. So if you guys want to become a member, it's really easy to do that. Let me just show you how to do that real quick. You come to my page here, Blue Cloud Trading, right next to the subscribe button, and it's free to subscribe. Make sure you hit the subscribe button and notification bell and the like before you leave this channel today so that you can find these videos in the future. And then hit the join button if you want, okay? If you want to get access to those member videos, what you need to do is select Blue Cloud Trader. This midpoint, you'll get the access to the exclusive member-only video tomorrow. If you want to get daily trade updates of the trades that I'm placing, it's okay, throughout the week, Blue Cloud Legend is the way to go. So that's one step up. If you want to support the channel because you like this channel, it's your favorite channel, you enjoy it, become a Blue Cloud supporter, and you'd be really helping out to keep this channel going. All right. Thanks very much, guys. All right. So let's get back. Let's get back to everything that we were just talking about. RSP looking good. Let's look at the rest of these. Now, the rest do not get a blue flag. There's something technically wrong either on the weekly or the daily. So they didn't pass the test. Here's Adobe, for example, in a downward channel, a stock that I wouldn't be touching at this particular time. That's the weekly chart, and here's the daily chart. Now, on the daily chart, it is starting to break through the cloud. But if, in my opinion, unless you have both time frames confirming it, this could be a very, very short-lived little move up. In fact, I wouldn't be shocked at all if price came up to the 200-day and then pulled back. All right, so there's a very strong level of resistance at the 200. That's the dotted yellow line that you see right there. Okay, let's look at AMAT. Now, AMAT has been in a nice strong uptrend, but today it did close. The price closed, okay, under the 9 period, and that's not a great sign, and that's not a good reason to get into a stock. You want to be waiting for it to break above it, above these moving averages, okay, and ride the wave. And in this case, it doesn't make sense right here to be adding positions, okay, but you can certainly, it doesn't necessarily mean you have to even also exit your position. If you want to hold off a little bit and wait and see, give it a wait and see approach, this thing is still structurally pretty strong here on the daily chart. But let's look at this on the weekly too. Yeah, so we've got a strong uptrend on the weekly chart. So it could be short-lived. We'll see what happens with that. Broadcom, gap down, entered the cloud. That's bearish. Look at the volume here. 95.5 million shares traded today versus yesterday, which was about 47, so about double. And the cloud is still bullish, but you can see here that it did break under the prior low here too. So not the time to be adding positions, okay? And here's the weekly chart. Also today, on Friday, it closed under the Tenkan. Now, does that mean it's the end of the trend? No. You can see back here, for example, it closed under. It was short-lived and then popped right back above. Same thing over here, okay? The majority of the time, these moving averages do a pretty good job at holding the price in place. You can see here, it was like just 1, 2, 3, 4 times, and then 5, just recently where it's been breaking under. How about ETN? ETN is under the moving averages. No on that one because it's still, it broke under this low right here, okay, as well. And we have a lower high here, but it's above the cloud on the weekly. And here's the daily. You can see it's very, very sheer on the daily, okay? HAS today down 2.87%. Profit margins are negative 12.81. Sales growth is negative 6.22 over the last 5 years. So not a stock that Hasbro. I think it was Kevin Simpson that was recommending this. Bad timing for him to be recommending it. Yesterday, it looked pretty pretty bullish, obviously. We had a very bullish day yesterday, but it's not looking particularly great here. And how about the weekly chart? Weekly looks good, except for that it's creating this kind of doji style candle. That's a reversal candle. So I would not be adding Hasbro on Monday, for example. ITA is the Dow Jones U.S. Aerospace and Defense Index Fund. It's been, basically rebounding a little bit here, but it's still inside the cloud, and it's not looking bearish for the cloud here yet. So no on that one. Micron broke under the Tengen today, down 6.7%. It may be short-lived. Here's the daily. There's the weekly chart. A shooting star. I don't like these candles. I certainly wouldn't be adding this one on Monday. Okay. PANW under the 200-day. Under the cloud, no on that one too. That's the daily chart. Here's the weekly, also negative. Unity Software on the weekly. Look at this one, folks. This is an interesting one. And this is why it's so important to have, I think, support levels and resistance levels. All right, like the 46.94, which is based on this high right here. So price moved up to that level, got rejected. Boom, dropped, found support at the Kijinsen, moved up, attempted to break. It did break through that 46.94. What that wick represents is the high of the day, but then the close is where the body is, and you can see that little where it closed under 46.94. So that got rejected. I think we have to wait here. I'd hold off on Unity. That's the weekly level. I'd have to. In fact, since this is a weekly chart that we're looking at, I would wait until Friday of next week before I would even consider adding a position in this stock, based on what I'm seeing right here, right now. We're too close to that 46.94, and we won't know what the next candle looks like until Friday, because it could do something very similar and then drop right back under by Friday, creating another one. You never know. And here's the daily chart. You can see that, okay? VRT found support at the bottom of the cloud, down 9.73%. We have a lower high over here than the prior one. Okay, technology sector. Here's another thing I don't like, is the opposite is happening here. So when the negative DI9, the red line is moving up, and the green line is below it, it's moving down, and the ADX is moving up, and you see volume increasing, not a good sign. The only positive thing is the fact that it's stalled right at the cloud, and that's a very strong support level. You can see that where it found support here in the past and then bounced. I mean, we also have that 155.84 level, goes back to these prior levels here. So yeah, I don't know, but I wouldn't be adding Vertiv, that's for sure. We got a lower high. Okay, and let's go into Tesla very quickly. 2.7% up today, holding up above the cloud. It's still under the weekly downward trend here. See that high right there? What about, so, I mean, yeah, technically it gets the blue flag, but it's so close to that resistance level that I personally wouldn't be adding here. Apple was up 0.09%. On the weekly chart, it looks okay. I mean, it didn't really move at all. Excuse me. On the daily chart, it's also kind of stagnant. If I get rid of those lines for a moment, you can see how it's basically just sitting on the 26 period, right? They're just like a bunch of pigeons just waiting to fly, hopefully to the upside, right? And not descend. But yeah, it's just chilling here. So I would not be doing anything quite yet with Apple either. All right, it's under the Tenkan. What about Meta? Here's an interesting thing that happened today with Meta, guys. Look at the long wick here. Now, I did make a note just to explain why that happened today, because I did do some research just to find out. And they call that, okay, the flash high of 711. Well, that's the level that it reached. The high of the day was 711. But here's the deal. Okay, the price you saw appears to have been a volatility spike or an anomaly in early trading rather than a sustained price level. While some data feeds recorded this as the intraday high, the stock spent the vast majority of the session trading between 640 and 655. Okay. It is common in high-frequency trading environments for a fat finger trade or a momentary liquidity gap to trigger a price like that for a split second before the market corrects itself. So that's what happened. It's kind of interesting that it broke above the cloud and then it just dropped. So it is also not something I would touch right here. Microsoft, also under the moving averages, under the cloud. No on Microsoft. And here's a weekly chart. At least it's stabilizing in this above this 468 level, but I wouldn't be jumping here. Amazon also declining more, right? Came up to the top of the cloud, and I'm sorry, the moving averages here, and close to the cloud, and pulled back. So this is a bad sign. I don't like that. The volume increased a little bit more. Okay, now let's look at the strongest sectors only. All right, XBI is looking pretty good. Here's the daily chart. Here's the weekly. All right, so I like what I'm seeing here with this one. GDXJ looks pretty good. The junior gold miners popped on the weekly chart above the 112.45 and closed above it. Now on the daily chart, it did pull back, but it stalled right at that support level. So that's very important. XLF. Okay, here's the daily chart. Up just 0.15%. Did create a spinning top type candle, which is a reversal candle. Here's a weekly chart. I like what I'm seeing for XLF. Look at this. This is the first week that we broke above that 54.49 level. So we're hitting all-time highs here with XLF, okay? Here's a monthly level, or monthly chart. I like what I'm seeing, basically. XLI. So there was a lot of naysayers in the market, like today, obviously, and, yeah, might we see the technology stocks, drop? It's possible. I mean, we're seeing it happening. But there might be some other sectors that start to pick up the slack, basically, like XLF. XLI is looking pretty good. Now, it did not close above the 156.99 level. So if the market rebounds next week, I think it has a good possibility of also, once it breaks through this consolidation area, I think this could really take off. I love patterns just like this. A tight, multiple week situation where price is just stagnant and not moving anywhere. And there's all this anticipation. And there's a lot of buy stops above these levels, folks. A lot of buy stops. And guess what? When they start getting triggered, boom, you see an expansion. So we'll see if I'm correct about that. What I do like is the fact that down here, you'll notice that the positive DI is above the negative DI. Volume is moving slightly up. So there's some little signals here that I'm seeing on the weekly chart. Let's look at the daily. Here's a daily chart. So on the daily chart, we broke on Thursday above that level. It was a big day on Thursday. The fact that it did that. Now, it wasn't, however, something that was conclusive. And I say that because the volume, if you look at the volume on Thursday, it was lower than on Wednesday. So when you see a breakout above a level of resistance, I personally like to see the volume actually higher on that day. It was not the case. And then you can see here, it did gap up a little bit and then, lost it. And it was down 0.63%. So we'll see, what happens tomorrow. I like the fact that the ADX is moving up. Positive DI is now just sideways and the red line is moving down. So most of what we're looking at is positive. Copper, COPX, down 1.46%, but look at it, holding above the moving averages still. A nice bullish future cloud on the daily chart. And on the weekly, we got a doji. XLV came down, touched the Tenkan-sen, the 9 period right there. Let me get rid of that for the lines for a moment so you can see it clearly. Touched that 9 period and rebounded. Love that. Notice how that happens quite often, right? So, yeah, I do like XLV. Let's go to the daily chart. Here it is, popping above the Tenkan-sen. It gets a blue flag. All right, this is the first day now. So you can see how multiple days it was pulling back. It might look like things are dire, but then when you break through a trend line, you break above that 9 period, this is some good stuff. The volume is not quite there. You can see it's a slight decline right there. And so everything, the directional movement index is kind of going sideways here. So, I'm not 100% convinced, but I think it's looking more bullish. Here's a weekly chart again. All right, and the cloud has turned bullish. So we got a higher high. So I think this is looking good. XLC, Communication Services, also, during the week on this is a weekly chart that we're looking at. For the last 3 weeks, we've been above the Tenkan. On the daily chart, we're building a base. So this is good. I like what I'm seeing here. The cloud itself is bullish. We just need to break through some levels here. You can see that trend line right there. That needs to be broken, the resistance level. And then I think we're off to the races there as well. XLY, also kind of stagnant right now. Stalling. Right? Look at this. Look at this area here. It's just stuck in that range. So that's what I'd be watching for, to see if it can break through there. SLV, it did move up slightly and then started to drop, down 2.64%. Do I still like silver? I do. I mean, it's a very, the cloud itself is very bullish on the daily chart. It is on the weekly chart as well. The volume week after week has been increasing, more and more buying taking place, but we had a down day. That's it. In fact, if you look at that little wick at the bottom, that represents some buying that happened towards the end of the day. So whenever you see a wick at the bottom, that's buying. Okay, let me show you on a 5-minute what that looks like. Okay, so there's the 12 p.m. So this is what it looked like today. So here we are in the morning, gap up, and it pulled back. But then what happened? It spent the rest of the day, the buyer started to come in, creating this upward channel right there that you see. Okay, so it just moved up. We created a higher low here from the prior one. But what we didn't do is get a higher high. That's all. So it's kind of building another base right there, almost like that you can see. And it's inside the cloud. So we'll see what happens on Monday. What about gold? Gold looking good. Here's the weekly chart. All right, we had the pullback. Remember that little scare in gold? It came down to the Tenkan. That's why it's important. So important to utilize both time frames, because the daily can scare you out. Okay, this is what it looked like. It looked very negative. You guys remember this? The big gap down here, it got under the Tenkan, continued to move down. But the weekly chart, okay, can keep your emotions in check, generally speaking. And notice how price has been remaining and staying above that 9 period. So I like gold. And it looks good on the daily chart too. Even though we got a red candle here, it was up 0.56%. Volume has been increasing 4 days in a row. ADX is moving up. Now, I'm not going to go into the rest of these ETFs below here, because the sectors and ETFs, because there's something technically wrong with them. But I am going to look at some of our members' requests. GANX, Gain Therapeutics. Let's start with a weekly chart on this one. Here we have steady volume increasing. That's a good sign. It's above the 200-day moving average. The Tenkan Kijun looks very good on the weekly chart, up 0.73% today. We've got a couple of reversal candles. It could potentially pull back a little bit, but I like what I'm seeing in this one overall. Okay, so not a bad looking chart. GXN is looking good, except for the hammer that you see here at the top. We still have a bullish future cloud. ADX is moving up. We've also surpassed this level here now. So you essentially have a level of support, okay, around that 104.40 level. So that's something that I'd be watching. In fact, let me get the exact number for you. The high is 104.61. Let's throw the exact penny in there. Okay, so that's based on this candle right here. And in fact, look at it. It came down, touched it, and then retracted. So the buying started happening again towards the end of the day. If you look at the 5-minute, there it is. Okay. So, and the volume increasing towards the end of the day. I mean, you can take that with a grain of salt. The fact that it stalled at a support level is important, though. Let's look at MKL. I like this one. Markel Corporation, insurance, property, and casualty. One of the industries that I have been recommending in the members-only videos. And I'm sure this may have also popped up on one of my scanners, I'm guessing, because it looks like a great chart to me. Here's the daily chart. You can see that it actually, right there, broke through that box, okay, on Thursday. Here we are on Friday, moving up still. The ADX is just starting to get started here. So that's the beginning stages for the ADX moving up. I like that. Okay, so I like this one. Let's look at the weekly chart. Breaking through this level 2 right here, that prior high. So MKL looking good. I like it. RTX on the weekly chart also looking good. So this one here pulled back and popped. And there's the nice volume right there. ADX, I'm sorry, the ADX is a little bit flat, but the positive DI is moving up, negative DI is moving down. That's a good sign right there. On the weekly chart, here's the daily chart. Steady volume, looking pretty good overall. After that pullback, and it looks like it's about to cross over the Tenkan-sen, about to cross over the Kijun-sen, so it looks good to me. Chikou span also recovered, got a back above price. Remember what we said about the white line, the lagging line right there? That's above price as well. SLVR looks good, down 2.83% today. That's the Sprott Silver Miners and Physical Silver ETF, stalled right at the Tenkan-sen, so that's a good sign. Weekly chart, overall bullish. Nothing negative to say here. App Lovin' on the weekly chart looks good. Okay. It is stalling though at that 745.61 level, and I don't like that candle. Here's the daily chart. It did pull back a little bit, creating a lower high from the prior one up there, and but it actually is above this high here. So we do have a higher high technically, but it is it has not been able to reach the 745.61 level. It did close under Tenkan-sen today. It might be a short-lived situation as well. We'll see if I'm correct, because the cloud itself is still bullish. The ADX has lost some of the momentum. When you see that white line like this, the ADX, the momentum is starting to pull back a little bit right there. You can see that. The same thing is happening with price. Price basically creates all this plotting that you're seeing here. So that is giving us a little bit of a signal that it might pull back a little bit. Alibaba, let's start with a weekly chart first. It's in between the two moving averages, so it's taking a breather. I call this like the equilibrium zone. There's nothing really to do except for if you have a position, I would be holding and waiting to see what happens here. I wouldn't be adding new positions. Here's the daily chart. It's inside the cloud. It's just a stabilized inside here, just moving sideways. PWR on the weekly chart. Okay, technically on the weekly, it did close under the 9 period, but just slightly. I don't know if I would call that conclusive. It was down 6.17% today. Here's the daily chart. Entering into the cloud. The future cloud is still bullish, but the Chikou span here closed, got under the candle. Tenkan-sen is still above Kijun-sen. It's a you can see the potential here that it could pull back some more, but we still have support at the Senko span B. All right, so just keep that in mind. That's about 5.2% away to the bottom of that to the bottom of the cloud. Finally, TSM on the weekly chart. Okay, came up, pierced the 311.37 this week. You see that little wick that's protruding right there. If you look at the daily chart, it's based on Wednesday's December 10th candle, a spinning top, and it pulled back. And it's basically stalling right at the Kijun-sen. I don't know which way this is going to go, obviously. I mean, but right now, would I be adding a position here? No. It's really up to each trader to determine their risk tolerance, whether they want to be holding and waiting it out. Here's a weekly chart. Technically speaking, on the weekly chart, it's holding above Tenkan-sen. So, for me personally, that would be more of a hold position. Okay. Now, that's going to do it for this video, guys. Again, remember I'm doing the members-only video tomorrow. If you want to check that out, consider becoming a member. Go to Blue Cloud Trading. If you like the software, this software that I'm using right here, it's called TC2000. And if you use the link, you get a $25 coupon. So if you want to test it out, you can actually try it out for free for a month. Click here, 9 more links. You get it actually clicked on this. Read a little bit about my profile here. Scroll down. And this, where is it? Right here. $25 coupon for TC2000 software. It's the third link down here. Okay, you click on that. It will pop up this screen. All right. And you add your email address. You download the software for Windows. Now, if you have a Mac machine, you can run it on a Mac. You can download the TC2000 if you have Parallels, or you can use the web-based version. that they have as well. So there's a web-based version if you don't have Parallels. And you click yes here. I would like to receive email relating to TC2000 products. And you will receive a $25 coupon towards your TC2000 service, courtesy of Blue Cloud Trading. If you go to the pricing here, software plans and data, you can see how much they cost. So for the monthly, like I said, it's if I click on monthly, work with me. There we go. It's $24.99. So there you can try it out for a month, basically. I would recommend the premium if you want to be able to draw on the charts. So it limits what you can do in the basic, okay? You can get the real-time U.S. stocks data feed, stock and option charting, live streaming watch lists, real-time financial news, practice paper trading as well, which is kind of cool. And then if you like that, maybe you upgrade to the premium. I do use the premium plus, but I'm a very active trader. Not everyone is very active, so there's additional benefits to this premium plus, for example. And remember, if you also switch to the billing cycle, let's say instead of paying monthly, you go to annual, it brings the price down. You can see the prices drop. You can even pay 2 years in advance by annually, and it brings the price down even further if you want to save more money. All right. Not a bad Christmas gift, right? For those who are really into trading. Okay, guys, thanks for watching. I appreciate you all. I will catch you all in the next video.